Well, Saudi Arabia is swinging for the fences. They've taken a direct shot at Iran, Russia, and the United States oil fracking business. They were talking in terms of $60 crude. When the selling or buying starts and everybody jumps on board, markets always go farther than they think they'll go, but OPEC did not cut its production like we talked about on Wednesday. If they didn't cut the production, we'd awaken to much lower oil prices, and that's what's happened. What will happen now in the United States is that those companies whose production is based on fracking are going to be severely tested. If it was based on fracking and borrowed money, as most of it is, those companies will lose their company. They will go bankrupt. They will be purchased by large, well-capitalized oil companies that have production that was developed before tight oil shale production became possible. And vulture funds are being formed today on Wall Street to go in and take advantage. They're lining up their ducks, just like they did when the bottom fell out of the real estate market, where they can buy assets for 25 cents to 50 cents on the dollar when it's all said and done. So it's the way it works. Saudi Arabia is acting in their own self-interest. They're protecting themselves. Well, they're delaying the confrontation with Iran. They're hurting Russia on the short term. The long term, they're hurting America's ability to produce their own energy. But what they haven't taken away is America's ability to create long-term reserves. So we know exactly what's going on. We know why they're doing it. Saudi Arabia, best interests come first. The rest of the world's come second, and they will do what they can to protect it. So today we've rolled to March. We're also in the February gold contract. The spread's about where it should be. So we've got this gap at 2703. Right here. That's obviously a trading target. And then we have the recent highs up here at 2713. So you can see on Wednesday we had this low in the 5 area. We've got the break right here at 3. So this 3 to 5 is going to be pretty good resistance. So 31 to 3103 is going to be sell 1. I'm guessing we're going to have strength in the stock market off of Black Friday. That should pressure us. But the ideal playing structure you sell is at 2.5. No news from us today, but around the globe, Japanese housing starts fell by about 12%. German retail sales were plus 1.9. They were guessing plus 1.6. French consumer spending down 0.9. Switzerland's economic barometer at 98.7, down from 101. Italian unemployment rate up to 13.2. So inflation rates for the EU met their forecasts. So the news out of the European Union was mixed. Business, generally speaking, outside of Germany looks a little questionable. Outside of Germany and Great Britain. Inflation, as far as the reports went, were up 0.1 to 0.3. So what is Europe building for? Stagflation, which is what their current government policies almost guarantee. And if you want to see what the model is, take a look at Japan. Okay, on the buy side, we've got support at 28. We're at 29.5. We got this low at 26. We've got this very low volume at 25. We got this Q period low. So 24 to 28 is buy 1. And then 21 to 17 will be buy 2. Usually we don't have much of the range in financials today. So the crude oil information is new. And it could impact prices long term. It's obviously deflationary. especially if you're in the oil business. But I've been through 3 busts now in the oil patch, and again, everybody will make loans for oil, or they'll all make loans for commercial real estate, or they'll all make loans for residential. Money gets too easy. They're all chasing the same group of people, and then the correction invariably comes. And when this is all said and done, oil companies that prospered in the 60s and the 80s and in the 90s, in early 2000, before there was fracking, they still got low cost production, and they're going to do, they'll do well. They'll pick up the pieces, but the group that will do the best will be Wall Street off their vulture funds. They'll have more access to capital. They'll have it in their hands at the moment. Large oil companies got to go make arrangements. So the Wall Street, again, will come in and prosper when the oil patch invariably turns around. Okay, looking at the 30-year, 19 to 23 is cell 1. The structural cell is up here at 20, like 28. Leaning against that, letting them get stops above 28. So there's your structural cell. The first cell comes leaning against the overnight session high. So 27 to 31 will be cell 2. This is the March contract. Last rotate down after midnight, stopped at 09. So 5 to 9 will be buy 1. It's just where support is. No magic there. And then 1 to 29 will be buy 2. Probably the biggest pressure coming today on the financials will be the strength in the stock market. Given the damage that's going to be done on the opening to the oil sector, it's hard to see that the stock market will soar to new highs, but we can make new highs. Okay, gold is off. What happened in crude is in and of itself deflationary. Cost of energy is going down. So gold, which is an inflation protection, and the central bank is a hedge against central bank printing of money. It will be a little bit under pressure. So we're back to our 75, 77. That's where we are. We've rejected prices beneath 80. So 80 to 78 will be buy 1. And 75, 73 will be buy 2. The government printing of money has not gone away. Looking at the rotate up here, our 85, 87, and this is a very, very aggressive sell. That's an area that we've got to get through. And you see just a lot of stuff. Here's 92. There's 89. There's 94. There's our 84, 85. So the 90, 92 area is much more attractive for the sell side, but 85, 87 is initial resistance. What's going on in the oil patch is deflationary, so that takes a little bit of the luster off of gold. Okay, the economic news out of the EU was not very good. A lot of the rally that came on Friday early on off the news, we got up to, what, 25, which is, again, just really a good sell zone for us. At a weak close, market retraced, we opened lower, and then London set the low at 30. So I believe on Friday we had a 20 to 30 buy on Friday, so that worked out pretty well. We're going to make 95 to 05 sell 1, 15 to 25 sell 2. Had a breakout here at 68. Got a V period low at 54, so we'll make 65, try to come back into this area. And again, I really don't like the buy side of this market, especially B1. The 40 to 50 I can live with. Just basically stops below 50, a little short covering when we get into that. The sell side, I think, again, because of economic weakness, is the trade for the euro, but it does rally. So we have buyers below 124. We've got sellers above 125. That's what it boils down to. Okay, crude. Let's go take a look at the F1 screen to put it in perspective. And you can see the spill. So 73, retesting that at some point will probably happen. So 70 is a pretty damn round number, and that's where we are right now. Excuse me, that's another reference point. The rotation up stopped at 69.33. So you can see 73, basically 70 because it's a round number, and then 69 is where this screen has us. We are headed for below 60. And again, the Russian ruble has crashed off of this. Again, the dictator's lifestyle, Putin's lifestyle, is not going to be touched a bit. Neither will the I think they call it the mullahocracy in Iran's not going to be touched. He won't stop them, and he won't stop their weapons development. But the guy on the street is going to be hammered. Okay, so our four-letter ledge right here is at 29. So 25 to 50, sell 1. Sell 2, if we go halfway into this, you got buying at 84, so 75 to 70 would be sell 2. The easiest trade to see is failure to get through this 69 1/4, 69.50. On the buy side, 25 to 50, pretty aggressive, and then 75 to 68 for buy 2. Okay, the E-mini, everybody's playing like we had a really, really good shopping. I looked on the northeast. The big storm had moved up and out. Didn't see any reports of anybody not being able to shop because of the storm. So be interesting to see if they don't have the retail sales that they expected, how the press explains that one away. They won't be able to use weather. Again, the trade's the same. If we can't get through 73, 75, we want to be short. That's where resistance is. And then I think if we get through that, then a new high, a new close for the month of November seasonal. So 79 to 81 would be the second sell. I think we're headed for new highs. 2200, 2250 is where sometime in, the correction now starts sometime in 2015. The correction was supposed to start in 2014. So nobody knows, but this market is pointed higher. The impact of the oil sector, which is where all the growth in our economy has come over the last 6 years, that and automobiles. And if you look at the employment of new jobs, the new jobs created in Texas and North Dakota are where most of the job growth or the employment growth has come from. So this is going to be a big hit. People will be laid off, and there won't be any new hires in the oil patch. So we got volume down here in the 65, 67 area. We're at 70, so first support is 65, 67, buy 1. Buy 2 is 60 to 62. Can't break it out. I would guess we would close in our 67, 68 area right here in this volume area. No news, no domestic news to drive up today's trading. Housing starts off in Japan. Germany's retail sales were up. That was the only real positive news out of Europe. French consumer spending down. Italian unemployment up. Oil sector will be hurt in Europe just like in our markets, but it will help consumer spending. So it's going to be down to how people view Black Friday, and the seasonals, I think, warrant buying into weakness, assuming we're going to get a good close today. Can't fight the tape, can't fight seasonals, and the Fed certainly would like that too. So they will be doing all they can to support the market, either rhetorically or, if things look ugly, with actual hard dollars. Okay, it'll take at least 20 minutes to get everything up and running right now. I'm going to get busy on that. I'll be back as soon as I can. Later.